Hi, and welcome to another edition of the Financial Advocate Podcast. I'm here with Ryan Stark, and my name is Colin Meeks. And today we're going to be talking about a topic that everybody really loves, Ryan, right?
Yes.
They love it so much that we get calls like 10 times a day of people just wanting to talk about it.
I know. It's as popular as I would say Harry Potter and Game of Thrones.
So the suspense, if it's killing you, is we're going to talk today about life insurance. And it really is a dry, boring product. So we're going to try to do our best to jazz it up and not really, spend too much time in the weeds about it. But in our normal course of planning with families, we do spend a good amount of time talking about various types of insurances.
Mm-hmm.
And life insurance is that one that, a couple things. Number one, it really is misunderstood. People just don't have a real good idea of the types of insurances that are out there, what they have, why they should have it, why they, if they're underinsured, why they need more, if they're overinsured, why they can cut back, if they have it through work, if they have it through, somebody in their family might have been selling it at some point. I mean, we find that people just sort of accumulate various types of insurances over the years, and what we really like to do in our planning process is figure out, number one, what they have now, and number two, do they, what they should need or what they need, and then sort of try to connect those dots.
Yep.
Ryan, when you first started here years ago, that was like one of the first things we did for you, right? You got your insurance license.
Yes, it was.
That's a fun test, isn't it?
It sure was.
And so you do, you're sort of the insurance guy now, and you've learned a lot over the years.
Yeah, there's just like anything else, there's a situation for, I guess, a product,
Right.
whether it's term or whole life.
Universal variable,
Yeah.
second to die, what else?
There's what is it? Final expense.
Right.
If you're doing it just for your funeral, it's basically, what's your situation and what type of insurance would fit what you need for your insurance goal.
Right, and let's sort of rewind here and go back to the beginning of how we work so that you will understand. We will, when we have a new client come to our office, we don't start talking about product till second, third, fourth meetings at the very earliest. And the reason for that is because our first step of the process is we want to get to know the people we're working with. We want to make sure we're going to get along, we can develop a working relationship. We like them, they like us. There's something in our repertoire they can do to help them out. We can leave them better off than the way we found them. So we want to make sure, number one, we build that solid foundation. If we do all that right, then we start getting into the nuts and bolts of it, and we find out. And today, we do a lot of other things in that process, but today we specifically just want to talk about life insurance. A case comes to mind, Ryan, that we just recently did with a family. Went through the full-blown financial plan, and we discovered it very early on in the plan what they thought they had and what they had were way off.
Way off, yeah.
And what was that?
It was, I believe they thought they each at least got their salary matched. And what it turned out being was the wife got, I believe, like $15,000, and the husband had $20,000.
Yep. And
he was making $75,000 or $80,000 a year.
Right.
So it was completely different than what they thought. And even if it was right from what they thought, they were still underinsured. But even to be wrong and be lower, they were way underinsured.
Right. So we basically, number one, alerted them to that situation, and they were pretty surprised. Which not the end of the world, because number one, they're both still alive, so they didn't really need.
Yeah.
We didn't have to worry about collecting. But number two, we could fix it.
Right.
So we do what's known as an insurance needs analysis, and that's basically we sit there face to face and say, okay, if the husband doesn't come home tomorrow, what we need to make sure is taken care of so that this plan can work.
Right.
Do we need to pay the house off? How much is the mortgage? Do we need to fund retirement accounts for the next 20 years? Do we need to fund college educations for the kids? In this situation, they had a daughter with a disability, so we needed to worry about a lot of other expenses there. So there was that. Do you have any charitable intent? So we did all these things, and it's basically a way that lets us know, okay, this is what's important to this family, and this is the amount of money that they'd like to have if something happened to the husband or the wife. And you know, that sort of gets us started down the right direction. We're not even getting into the type of insurance yet, right?
Right. Yeah. Exactly.
So we're just trying to find out what's the right amount. And then once we figure out the right amount, then we have to figure out, well, how long do we need this right amount? You know, is it a flat, you know, X amount of dollars over the next 30 years, or does some of this fall off? You know, does it go in half in 10 years? You know, when I retire. So we you know, do all that analysis, and so that sort of points us in the direction of the type of insurance we need. Once we figure all that stuff out, then we start getting into the nuts and bolts of the types of insurance, right, Ryan?
Right.
So talk a little bit about what types are out there.
So when we're going through this process, I think the important part of finding out what you need when is because there are so many different types for different situations. So when we're going through the planning process, we're just opening up all the situations when you possibly could use life insurance. And in this case, they didn't have as much as they had through work, which I'm not sure if they would have known had they not looked at it. They didn't have any through individual. So you can do whole life, you can do term, and there's different kinds of whole life. You can have a small whole life, which is a small whole life. When I mentioned final expense before, that's just a small whole life policy that pays out, you know, until age 100. Some people do it for 10 or 15,000, 20,000 maybe.
Enough to dig a hole.
Just enough to dig a hole, basically. You know, and then we have second to die, which is whole life where you have a husband and wife, and basically it pays out on the death of the second individual. So that's usually how we're funding our special needs trusts. We have a lot of clients who have term insurance because they only need coverage for 30 years. Maybe they have enough assets to cover them, or you know, we're planning and we're working with the growth of their assets mixed with insurance,
right,
covering them a certain amount. So there's different pieces that go together, and why we use different kinds of insurance different ways.
And I'll give you a personal example. When my oldest son was born, I bought a 30-year term policy. And basically, I put an amount in, and I said, okay, this is the amount I'd like to have, and here's the premium that it's going to cost, and that's guaranteed for 30 years. You know, provided the insurance company's still in business, which, knocking on wood, here they are. But that's a 30-year term policy, so I know guaranteed. And I'm 15 years into it now. My son is 15 years old, so I know for the next 15 years I've got that amount of insurance for that amount of money. And I've added on to that over the years because you know, my liabilities have gotten more. I've got another son, and you know, different needs there. But you know, each and every time I bought insurance, it's been for a specific reason. So you can buy a 5-year term, a 10-year term, a 20-year term. I mean, a lot of times people will buy, you know, if you buy say a boat, and you want to, you know, it's a 10-year boat loan, and you want to make sure that if you die, that the boat loan is paid off. You can buy a 10-year term policy. So really, there's a product out there for most every need. And you know, it's just up to finding the an advisor to sort of steer you down the right road to make sure that you're buying the right thing. Mm-hmm. A lot of times, what we'll see when we meet with people, you know, in the planning process, is that you know, they'll just have a handful of different types of policies, and that could be because you know, somebody in the family, you know, so and so used to sell insurance, so I felt bad and I bought it from them, or you know, I bought this through my credit union because they were giving it out at a certain rate, or you know, whatever the case is. And they, much like people accumulate different types of investment accounts, a lot of times people will accumulate, you know, a bunch of different types of insurance policies. So we'll go through and see, you know, number one, make sure the beneficiaries are right. Number two, do you still need this insurance? Number three, is there a better deal out there for you? Are you paying too much? Is there something else that would do a better job for you? So we're looking at all that stuff.
Right. And we have a lot of experience in looking at it. We've seen people pay $50,000 a year in premiums for insurance.
Oh, Jesus. I forgot about that guy.
We've seen people who didn't have insurance, and the husband passed away, and he was, you know, like 50 years old.
Right.
It's the reason why you buy it. When we hear that story, it's something that most families, you know, never live through. And sometimes insurance can feel like a cost rather than an investment or something that's giving you peace of mind. It just feels like something that's, if you don't die, it's no benefit. I mean, it's great if you never have to use it because it means you're still alive.
Right.
But if one of you happens to pass, then it's going to be one of the greatest things you can have, because there's nothing worse than grieving and going through financial trouble at the same time.
Right. And I've never delivered an insurance check where the family said this is too much.
Yeah, right.
It's, you know, not that we want to oversell any amount of insurance to anybody, but the family, whether it's $500,000 or $750,000 or whatever that check was. I've never had a situation where, I sat down with a client and said, okay, here's the insurance check, and they said, wait, well, that's too much money. There's always, there's always room for having a little bit more money in your life, and unfortunately, when you are going through that grieving process, things suck.
Right.
So it's always good to have a little bit of cushion there, and the bigger the cushion, the better it makes things.
Not to say that also people, when you're saving and you're building up your 401k and you're living your life, if you're 40 to 50 years old, you're not paying for your funeral yet.
Yep.
You're not putting cash to the side for the funeral. It's for colleges, it's for savings for emergencies, and that's not the emergency that you want to have to dish it out for, because emergencies will happen on top of that. Maybe you need a new AC unit, maybe you need a new car. And to mix that, with the funeral, and it just becomes a mess, and we've seen it, and that's why this is the one thing that, not to say we push product on anybody, but we make sure that we try to fill this void as much as we can, because I've talked to a woman on the phone who's crying, because of the situation she's in, and when you see it, you don't want anybody to have to go through that again.
Yeah, and one of the reasons I spend way more time on life insurance now than I ever did. And I started out in the insurance side of business. The first 5 years I worked for a big insurance company. But one of the reasons I spend way more time on it now, because number one, I'm a father, and I want to make sure that my family's taken care of, my wife and kids. But number two, Ryan mentioned a guy that passed away a couple years ago, and I had actually proposed to him like $300,000 of life insurance, and he looked at it, never got back to me, we never did anything. He took the paperwork home to his wife, and he wound up passing away. And the wife was really distraught at the time, and she came into my office with the with the proposals I had given him, and she was under the impression that, hey, I've got this $300,000 of coverage. Things are going to be okay. Well, I had to tell her, he never took action. I was never able to get him to do what he should have done. And just devastating, that $300,000 is the difference between her having a paid off house and not having to work again, and now she's got a house with a mortgage and she has to still work, and she was in her late 40s at the time, so it really did stink.
Yeah.
So we do spend a lot of time, and we don't push hard, but we want to make sure that, hey, this is what you need, and it's really the cost. It just doesn't matter, unless the cost is exorbitant, and it's the difference between paying insurance premiums and food. The cost is the cost, but you just have to get over that. And if it's part of the plan and it's a necessary thing, then we're gonna make it known that you should do it. We can't make anybody do anything, but it's one of those things where it really needs to be done.
That's why I also wanted to bring up situations you need this. Because I think it's more important to understand what we're thinking in terms of why insurance works. Some people may feel that you're thinking about commissions and selling and stuff like this, and obviously they're involved, but it's more about what's going on in your life and how can we fix it.
Right.
One of the newer situations that we're dealing with, focusing on special needs, is having insurance for the homemaker when they're taking care of a special needs child, because you think of, let's call them the breadwinner, making more money, whether it's the husband or the wife. There's usually somebody at home, that's doing the extra legwork for the special needs child, whether it's running them around or doing a little things that only a parent can do. To pay somebody to do those things is really expensive.
Yeah.
So that's just another little area, but this is what we're thinking about when we go through the planning process. And obviously we try to get you best rated companies and lowest cost, but just as Colin said, the cost and the cost. But when it's all said and done, the peace of mind lifts a big weight off your shoulders when you feel like your child's taken care of because you did proper planning. Yeah,
absolutely, Ryan. And so, as we said, this is part of the process. If you are interested in learning more about how we can do an insurance needs analysis as part of our financial planning process, please feel free to get in touch with us. Both Ryan and I are accessible. We're more than happy to take a few minutes and talk to you on the phone. Explain to you anything you want to talk about, and then if it's right, if it's a fit where we need to set a first meeting where we'll be able to help you go through our process, we're more than happy to do that. So keep that in mind, and you can email us. We've got some full brochures we can send out to you that explains that process and the costs, and that might help you make a decision as well. So thanks for listening to this edition of our podcast, and we look forward to talking to you next time.